We're about to enter a very, very crucial long weekend. It's capping off a week where we saw somewhat of a flattening in the new case curve. And the market rallied very hard this week, up every single day and up significantly. Best week since '09. So just to put things in perspective, that's the kind of week we're talking about right now. And this is the second rally we've seen since the coronavirus crash that has been the best week since '09. It's our second one. So yesterday, I was a little skeptical about that rally yesterday. We had an initial pull-up, flat, then another pull-up after that. I thought that was a little too aggressive. I thought Monday's rally was a little too aggressive. Today, we rallied on top of that. We've been adding a lot of cases still. It's not like coronavirus is gone. We're still adding a lot of cases, 2 consecutive days now of over 30,000 cases. That said, we're off the peak. The peak is 34,000 cases. It looks like we have flattened, so my skepticism around, hold on, we saw one big decline, and then every day after that we're climbing. It seems to be fading probably. People are social distancing. Seems like we might just kind of be treading at 30,000 for a little bit and then be heading straight down. Whether that down is quick or a plateau, I don't know. Nobody knows. But it seems like we have hit the peak. Every day we're kind of confirming that. I was a little skeptical, not ready to buy, because it was like the market's rallied a lot. Let's hold on. Let's pause for a sec, see what happens. And, we had a lot of cases. But this morning, what caused the market to rally? Well, this morning we were down. We added a little bit more than 30,000 cases last night, albeit less than the day before, just a couple hundred less. But at 8:30, the same time, so this is clearly a coordinated effort, at the same time we got 6.6 million jobless claims. We also got a $2.3 trillion stimulus package from the Fed. And this is not like the previous stimulus package with $1,000 checks, easy small business loans. This is more for the states, to provide states the cash that they need in order to get tests, masks, all that stuff, because the states are feeling a little pressed for cash right now. So we got to give them tests, because right now the Fed's saying and the doctors are saying, all right, we're starting to see the curve flatten. We're not going to see 1 million deaths. So how do we get back to everyday life and turning the economy back on? Well, part of that is going to have to be testing, because if we're going to be turning the economy back on, if you ask me, the virus isn't going away ever until there's some sort of vaccine and cure at the same time. So that means there's going to be some level of spread, couple hundred cases a day, every day, a small amount of spread, so small that people are going to be fine going to bars and stuff and not feel affected, not feel concerned. But in order for that to be the case, we need to have lots of tests. It's got to be like you go to the doctor and they're like, we don't have the vaccine yet, we don't have the treatment yet, so we're going to test you for coronavirus regardless. And the states need to pay for that. They need to order that. So the Fed provided them with the cash to do that. Huge part of the stimulus package. There's a bunch of other stuff for businesses. This is kind of more of a back-end type of stimulus package, whereas the other stimulus package was more of a front-end consumer and like small business focused. This is more state focused and bond focused. So without getting too deep into that, it's mostly to keep the economy on the path to turn on. What do we need to turn on? We need tests. That's a good sign. The long-term prospects are looking good. That said, next week kind of begins the heavy earnings week. We've got a bunch of banks reporting earnings, and this is the next stage of uncertainty. So we need to see how these bank earnings look. It seems like they're going to be somewhat okay. They've been saying that their balance sheets are pretty solid. Jamie Dimon said, we might have to pull back on the dividend, but during these times, you can kind of understand that. So we've rallied a lot. We're kind of midway between the all-time highs we were experiencing before the crash and the bottom. So to me, it seems like we're at a pretty fair value level right now. And you can buy right now if you're a long-term investor and you're able to stomach some chop in the short term, which I am. If you're watching this channel, I assume you probably must be. So you can buy. But don't be afraid if there's a massive pullback after that. Maybe not massive, maybe a little bit of a pullback, nothing too crazy. But just be able to stomach some chop. It might come. And if there is some chop, hopefully you can keep buying. So that's kind of where I'm standing. I'm definitely not expecting us to retest the lows. I feel like that's a term people are just throwing around. I don't think that's going to happen. I don't think we're going to re-bottom or set a new bottom. So I think we're at a pretty good level right now. And we're just going to see what happens. I'm just going to see what happens, how this develops from here on out. And hopefully the states get all those tests, the cases come down, and we can turn the economy back on again. So until then, peace.